Hi, investors. It's Dr. Marcia from Bookworm Investment Club. And I'm the creator and the founder of Bookworm. And it's where we teach women how to build profitable stock portfolios. And today I am going to be talking to you about dividend growth stocks. In particular, I want to show you 3 stocks because these particular stocks have paydays this week. So if you own any of these 3 stocks, you will be getting paid simply by the fact that you own them. This is the week of Good Friday, so the stock market is only going to be open 4 days, and they're going to be closed on Friday. So keep that in mind. The other reason I wanted to talk about these stocks is that I want you to see the difference in the amount of what a company will pay you in dividends depending on the company that you own. So I want to introduce you to this particular site that I got this information from, because we at Bookworm, we want to make things simple. And we want to make that our job easier as investors in pulling together information as we build our stock portfolio. And so I'm always on the lookout for sites that I think would be useful for us. Some of the sites are free, and some of the sites you have to pay for. But that's the business of being an investor. This particular site that I want to introduce you to is called Simply Safe Dividends. And it is a website that you do have to pay for, but the value of the information that you get at this particular site is worth the cost. So I've taken some screenshots of these 3 particular stocks, and I just want to go over just one thing with you when it comes to showing you the type of money that you can make from these dividend growth stocks. So let's get started. And I'm going to share my screen. The first stock that I want to show you is ADP, Automatic Data Processing, the payroll people. In this screenshot, it shows us that they will pay dividends on April the 1st. So if you own this stock, if you are a shareholder, you will get paid on April the 1st. However, I also want to point out to you this particular date, which is the ex-dividend date. You will only get this dividend if you are on record of owning the stock prior to this ex-dividend date. So if you decide that you wanted to own the stock or that you wanted to get this dividend, you had to be on the record, this company's record of being a shareholder on March 10th or before. So if you were, down here talks about the payouts. So this is what you would get per share on April the 1st, 93 cents per share. Now you may say, well, Marcia, that's not a lot of money. Well, that depends on how many shares you own, because what we're trying to do as we develop our stock portfolio is we want to be able to accumulate shares of our company. So for instance, if you, over the time period, you decided you did not want to take the dividends immediately, that you wanted to take that money and either reinvest it or continue to accumulate shares. Say that we accumulated 50 shares in this particular stock. So we could expect 93 cents times 53 shares. And that's how much money that we would get simply by owning the stock. Now, that's not a bad deal. Not a bad deal at all. So that's ADP. Let's look at another company that also has a pay date this week. On March 31st, and this is Pepsi, Pepsi will give its shareholders $1.02 for every share that they own. And their ex-dividend date is March 4th. So if you own the stock prior to March 4th, that's March 3rd or prior to that, you will actually get this particular dividend just by being a shareholder. So that's Pepsi. The next stock I want to show you is a chip company. So it's in the technology sector. They had their pay date also on March 31st. But of course, you have had to own the stock before March 19th in order to get that dividend. And if you actually own this company, you would get $3.60 for each share that you own. Not bad. Simply collecting money for owning a stock. So that's what I wanted to show you today, the advantages of owning dividend stocks. And not only that, but owning these dividend growth stocks, stocks that consistently increase their dividend payment every year. Yes? And that's why we at Bookworm encourage you to start looking at dividend growth stocks and start adding those dividend growth stocks to your portfolio, of course, only after you've done the analysis and they fit your criteria of your analysis. Now, disclaimer, even though I talked about 3 stocks, it's not a recommendation to buy or sell a stock. This information is for educational and informational purposes only. Okay, so that's it. More about Bookworm Investment Club. We have various programs to help you develop your stock portfolio, including our signature program, the Stock Starter course, which we have to take you from beginner to building to managing your stock portfolio. That information can be found on our website, bookworminvestmentclub.com. Okay, so keep investing and we'll chat soon. Take care.